but mainly the bubbles are set to 30 in order to show. And these lines right here, this is the smooth Heikin ash sheet lines. I'm starting to use these in stream width so new traders can use this. If you see them separated and they're sloping upwards, do not be trying to short the market because it is definitely in an uptrend. You can either use this or you can actually use a 9 EMA, to be quite honest. Okay, so when we opened up, we had 44 lot and 168 lot kickoff right up in here, and then we had a little inside bar, and then we were breaking that area. You could have, if you want to trade the opening drop the first 5 minutes, you could use that 168 for support. And once we start trading above the high right there, you can actually try to get yourself a nice little trade. But I normally don't do that, but that's just me. I just wait for like the first 5-10 minutes, and then we came up, we kind of pulled back down. You had a 30 lot up here. This is what you want to see. You had a 30 lot up here and it got absorbed. But the reason I didn't get short right here is because you have all this support right here. That 185 is support and that 168 is support. You have all that support right there. Okay, so you got to be careful about getting into stuff like this. Now, that 138, 172, they got caught and they got absorbed in this area. And if you were looking at the order flow pulse, you could possibly see that they got absorbed. But the key thing that you want to take note at is the 172 right here. The 138 got paid a little bit, so they were in the money. They got paid a little bit, but that 172, once we traded down, we couldn't break this 168 area. That 172 lot seller, well, they got absorbed because this candle right here, the next candle opened up. We could not break the low right there. And I'm telling you, these institutions are seeing that. It's not breaking the low. It starts trading above here. And guess what they're going to do? They're going to cut it, and then we can start running back up, okay? Because they're going to get squeezed out. And they did get squeezed out because we started running back up. I mean, you could have taken that right there and probably get out about right here and get yourself about 25 points. That's a $500 day on the mini. That's pretty good. Right up here, once you see this area right here, okay, this 200 lot, 200 contracts kicked off. We closed above it, which is bullish. That's good. But the previous candle, we didn't break this high right here. Plus, we have traded, when I was on stream and we started spreading apart like that, I think I said you got to be careful because once we trade too far from the smooth Heikin ash sheet lines or even the 9 EMA, you can throw in a 9 EMA. Basically, it'll be the same thing, just roughly. It'll be the same thing. So you got to be careful when it trades too far away because then we came bouncing right back down and then we kind of sold off. And then this area right up in here, you could have tried a long right there. That is valid trade. You could have tried a long. You had 100 lots and you had 100 contracts right there. I mean, that would have got you like 5 points or something. And I think when I was streaming, yes, when I was streaming, that 100 lot kicked off. And then on stream, I said, okay, you're in the money. If you're up 10 points, you need to move to a break even to see if we can run and take out these highs right here. We did not do that. We started trading down. So you gotta be disciplined and get out. Either take a break even or a small loss. Do not be taking a full stop out down here. It is not needed. Okay, not needed to be taking a full stop out, people. If you're wrong, get out, break even. Okay, you can always get back in. If it reverses and we have a large buyer come in, you can always get back in. Commissions are cheap. I mean, if you make a 20-point winner, you got $400 in your pocket. Who cares if you have to pay? If you have to get in like two or three times, you have to pay like $20 commission. Who cares? So we started selling off, and we got a 174 lot seller. Now the thing is, you got to be careful because you have this area right here as support. Okay, you have this area right here as support. Okay, but we kind of ran right down through it. Okay, but you got to keep an eye on that. Because you have to, if you're in this, and this is a valid short, we have 174 contracts. We're trading below the Heikin ash sheet lines. They're starting to curve back over. If you get on this candle right here, and you get in right here and your stop's up here, that's like a 30-point stop. That's $600 stop out. But then you come down here and you get to this support area and you just keep going. I mean, well, you got a 100-point winner right there. So let's say you try to get in here and you break even, or you took like a $200 loss, then you got like a 100-point winner right here. I mean, 100 points, that's like $2,000 on a mini. So, like, who cares if you have to get in and out a few times to try to get yourself a run? You got to protect your capital, people. You got to protect your capital. So with that 174 kicked off and we kind of sold off, that is what you're looking for. However, you got to be careful with this 185, that 129. You got to be careful with that because they're going to defend that area. More than likely, they took their profits up in here, but you got to be careful because they're going to defend that area. Okay. These are things that you have to look at and you have to be cognizant of where you are. At 174 lot kicked off. So what I would be doing is getting in here and then right up in this area right here at about 25.1, I'd be looking, I mean, that right there, I would be tightening up the stop, okay, to possibly a plus 10 points. I mean, that right there was roughly about 25 points. So you got yourself $500. So you got to be careful and look to your left to see where these big buyers are because they could defend that area. They could defend it. They probably, who knows? This could have been the same people right here, the 174. It could have been the same institution as that ran the market up and then took profits and then started running it down. We have no idea. So, but you got to be careful with that. So as we traded on throughout the day, we had 153. I really wouldn't take that short. And I was on stream about that time, and I said I wouldn't take that short. Why? Because, well, for one thing, you took the short down here, and you're trying to take a short right here. That's 175 points it already ran. How much more is it going to go? The odds are really not in your favor, to be quite honest. But what you are looking for, if you're counter trend trading and you're trying to counter trend trade, and I did take a trade right here. I did take a trade on that 66. I kept tight stop. Okay. I took a quick scalp on this. Okay. 66. I took a quick scalp because I scalped it off of the order flow pulse. I was looking at the 1 minute. You got to, you get in here at 66, but you got to be careful because you're counter trend trading. You got 153 lot right here that's going to defend that area more than likely. And we took we couldn't break through right here. And then we finally broke through, but I took a quick scalp, made myself 15 points. You know, you got yourself a $300 winner. Where's your stop? Well, if you get in here, if you're selling off and you see a 66 contracts, that's pretty good size. You get in on the break of that. Where's your stop? Your stop's going to be possibly down on the low right there at about 13 points. You can get yourself a quick trade real quick. What you could do is, let's say you're trading 1 minute, you could go into 10 micros, get that pop, sell half, and then take the other half to a break even and get yourself a runner. That's how the game is played, people. That's how the game is played. Now, we closed right here, and we have 194. We closed a little bit below it, but once we broke that high right there, we ran up, and then we started coming right back down, and you can get out around here for about 20 points, okay? Where's your support? Where's your stop? Well, if you get in here and try to get that break, you've already traded down here, so you're probably at a 25-point stop, and you could possibly get yourself about 30 points, okay? That's like a 1-for-1 trade. That's not too bad. But we ran up and then we pulled back. This is one of my old trades I used to take. We run up and I wait for a small pullback and get in here, get out there for about 10 points, get a quick scalp, go in heavy, get a quick scalp. Where's your stop? Right down there at that low right there. Let's say you go in here with about 5 minutes, you get that scalp, you get a pop, you sell 1 or 2 of them real quick, you move to a break even, and then you try to get yourself a runner, and then you get stopped out. Normally, I take my break evens to a break even plus 1. Okay, so that is what happened throughout the morning. Now, as we kept trading through, As you can see here, these sellers, well, they got absorbed a little bit because we closed above it. That seller right there, stacked sell imbalance, got absorbed because, well, we couldn't trade any lower. They got absorbed and we traded up. Okay, don't be taking sell imbalances right here because the Heikin-Ash sheet lines are smooth and they're separated and they're sloping upwards. This right here is not a valid trade to take. Okay, that 39 with the double stacked imbalance area right there, that's not a valid trade to take because for one, we're sloping downwards. That's counter trend trading. You don't want to do that if you're a new trader. You need to know what you're doing. If you want to counter trend trade, you need to know what you're doing, and you got to be extremely disciplined, people. You got to be extremely disciplined. Now we started trading around. I think I ended the stream around noon. This right here is a valid trade. Okay, this is a valid trade right here. You had 120 lots kick off right here on a stacked buy and bounce, and you got another stacked buy and bounce. Actually, I was still streaming at this time. So when we came down, I said, if you come down right here and you buy, your stops down here at about 30 points. So if you buy right here and you see this 48 lot right here, this is key right here. You little gurus on YouTube are going to be like, I either take a full stop out or get a 3-to-1. I let the trade work. Well, I don't. I trade what the market's telling me right then and there. We got a 48 lot. I thought for sure we were going to shoot up, and we didn't. We had a buy and balance. That buy and balance got absorbed. We started trading down. And what happened? Break even. I'm out. Break even. Don't care. I'm not taking this full stop out. I'm not an idiot. I ain't giving money back that I made for the morning. I'm not crazy. We sold below right here. We had a sell stacked and balance area right there. The little sell stacked and balance area. We started sloping down on the current Heikin-Ash sheet line right there. You valid trade. You can get in, put your stop up here because if we trade above that sell and balance area, you probably could pop up to this area. You come down here. You're not going to get the full candle, but you start trading back up above half of it. You get yourself about 10, 15 points. I don't care if you get 5 points. Be happy with what the market will give you and move on to the next trade. Be happy what the market gives you. If you're looking for a 50-point winner, who cares? Take what the market will give you right here. Boom, you're in a winning trade. You got to be crazy if you get in here and you're down here and you're up 30 points and you're going to give back 30 points. Well, I'm sorry, you're crazy. That's just the way it is. I'm not here to be your friend. I'm here to teach you how to trade. This market is brutal. It'll chew you up and spit you out. We had a 150 lot seller, but they got absorbed right up in this area. They got absorbed up in this area, just like these 3073s. They got absorbed. We moved up. So would I short this right here? Possibly. And the reason possibly, if we break that area right there, then yeah, I'll go short and try to get a runner. Okay? That didn't happen. That did not happen. Why? Possibly because up in this area, we had some buyers up here that ran it up. So buyers right here, a little pop. We have some shorts. You got some support right here. The shorts tried to do it right here. They couldn't make it. They got absorbed. So what's gonna happen to this 150? They got absorbed a little bit. Then the big dogs, they said we've had enough of this. We're pushing the market down. We're going down. I don't care. You absorbed us up in here, but guess what's going to happen? We got a 144 contracts that just kicked off. We broke that low area. We got 144. Don't get FOMO. Don't chase it. Wait for the close because it could shoot back up. You got the close right there. You took a little bit of heat. How much heat did you take? About 20 points. And then you get in here. Where you get out, you got some buyers right up in there. They got absorbed. Even if you got out right here, that's a 40-point winner. It's $800. So this is how the game is played, folks. You have to follow what these institutions are doing. This is what these bubbles are. These are one order that's getting kicked off. There's not order slicing, calculating the numbers on like all the orders that come in within 100, 200 milliseconds. That is not what is going on. These are one contracts from the institutions. The market makers that are working for these institutions, they are matching up these orders between each other institutions. Retail traders are about 5% of the market. Institutions and hedge funds and all the big boys, they don't give a flying crap about us retail traders. We're a piss in the wind with the volume we give them. So right here, You could have taken that, gotten yourself a nice little run, little 20, even if you got 25 points, that's $500. Would you be trying to buy? Because there's a lot of people here that are going to be, oh, we're going down. We can't go down no farther. We can't go down no farther. So there's people that seeing this, trying to catch a falling knife and try to buy. Maybe they got lucky and got this pop up here. Maybe they got lucky and got this pop. I think that 36, I kind of did a really quick scalp because I was trading off an order flow pulse and I was just reading the orders come in and I saw that 36 and I was like, okay, we got a little bit of volume. I'm going to try and pop that and try to get that. But hey, I can scalp five points. I don't care. That's $100 on 2 contracts. That's $200. You do that a few times, you're sitting pretty for the day. Okay, we didn't see any more large selling up in here, but it was kept moving down. We had some buyers come in here, but they got absorbed. Okay, we had a 37.72. We kept selling. Okay, so then we had this bar right here. We had a buy and balance area. You could possibly try and scalp that real quick. Actually, I did scalp this real quick, but I didn't. When it started trading back down, I did not buy off of that buy and balance area, and that's valid because it's halfway of the candle. That is a good valid trade. 49 contracts kicked off, so I waited till we broke that high right there, and then I just get it, and then I just get it. Whoops! I just get a quick scalp real quick. You get in here, you get out, start trading. Oh, got my 5 points. I'm out because, well, I'm not going to catch a falling knife and take a full stop out. I'll take my 5 points and go home. Take $100, move along. Take your $100, move along. There's a buy and balance right here, but that's not valid. You want to know why it's not valid? It's up, way up here above the candle, but we closed below it, so that's not valid, okay? So we got this 46 lot, and I tried to go long. I tried to go long on the 46 because we got a buy and balance. We got 46, we closed above it, but you got to look to your left. You're going to have resistance right here. So I tried to scalp that. Boom, I was wrong, and I took a small loss, okay? I take my loss like a big boy and move on. Okay, you got to be careful because you got these big dogs right up in here. You got them big sellers right there. Those big sellers are going to defend their area, okay? Yes, I tried to get long right here, but guess what? I made some money, and then what's going to happen? I made some money, a little bit more money off stream. What am I going to, okay, you catch a nice little short, you get a good payday. Am I going to try to go long here and try to go full port this thing and try to catch a spike up? No, I'm not crazy, but I'll just go in. I'll just go in a little bit, and then I'll be quick on the trigger and move my stop, and I will take a stop out. I do not care. I'm not taking a full stop out. I don't care. $100, $200 loss, no problem. Okay, if you're making $600-800, you can take $100-200 loss. Who cares? Move on. Okay, so why 117? I think I scalped this area a little bit. You saw 117 and you break that highs. Most of the time you can get a pop, but you got to be quick because my motto is pop, sell half, move to a break even. We get a pop because you either pop or I'm dropping. So I got tight stops, people. I got tight stops. When it comes down here, I'm out. I'll take my $100 loss. I don't care. So you get in here, you get out there for about $200 loss, but then you come up here, you start trading back down, and you get yourself about $200, a little 1-for-1 trade. So, but that's counter trend trading, people. That's counter trend trading. You got to know what you're doing. If you get a quick pop, you sell into the pop and move to a break even. Do not give any money back because this area right here is going to be defended. They defended it right here. Okay, we traded below right here. Up in this area, when I was looking at the tape and I was looking at the order flow pulse, they got absorbed and we moved up. Okay. This area, I was thinking, okay, sell off. Okay. They're not breaking through. The bids are holding. The sellers are getting absorbed. And once we had that large contract come in and I trade on the high and I get that pop, I sell a little bit and move to a break even. That's just how the game is played. Because I know we're in a dangerous area to go long. Why would you be trying to go in long when you have about 400 contracts up here? They're going to defend that area, and that's exactly what they are doing. They are defending the money they are making. They made some money here to take a little profit. They pull back up. They add to it, and it runs back down. They take a little bit of money. It's just ping-ponging, people. This is auction market theory. auction market theory is the market needs to find value. The value was to the downside. Then during auction market theory is market will search for value and then it finds that value. So it searched for value. The value was to the downside. And now what we are doing. What we're doing is we're pissing off some newbie traders because they said, oh, this chop is killing me. Well, the newbie traders or the traders that don't follow this kind of stuff don't understand that auction market theory is we sell off, we find a balance area, and then we're going to search for more value. Is that value to the upside? We don't know. It could be down to the downside. We don't know. But we try to go with what the institutions are trying to push. Right now, what I'm seeing is I'm seeing some big contracts. Okay, you got some 39, 46, 56. That's not really big. That 117 is big. The 81 is pretty good. 90 to 48. But what are we missing in this area right here? What are we missing in this nice balanced area? Because the market tries to find value to the downside, and we trade around here to try and find a nice balanced area, and we're searching for more value. You've got some longs in here that are supporting this. I need really large contracts coming in because we need to break this area right here. Okay, we need to break this area right here. We need to break this area and try to get a short squeeze on 24,950 area to get a short squeeze to move up here to the 2580 area. Okay, we're just in a balanced market. It's 220. More than likely, we're just going to be bouncing around. We might get a short squeeze. We might not. All I know is I'm done for the day. So I'm hoping this wrap up has taught some people. I know I went through it kind of quickly. You might have to rewind and listen to it again. Listen to it over and over. This is a good day for teaching. This is a good day for teaching because we have some large participation. We had a pullback. We had some sellers. They got caught on the wrong side. We moved up. And then we got a big seller up there at 174 that was breaking. You could have tried to get in there, but you got to be careful with these big buyers. Are they going to defend these areas right here? And it looks like they didn't. They might have just taken their profits up here, up in this area. They might have taken that profits. That 200 lot buyer right there, I bet you they took a loss. That is what we're doing. And then right here, we had some buying up here. The sellers got absorbed. And once we break that 150, 153, as you can see, we kind of moved up. You got that 194 supporting you. You can buy, you can do a starter position right here. And then once you see that 94 breaking that high right there, you can go ahead and add to your position and your cost average is right here. You want to cut your losers quickly and add to your winners, people. If you do that, your account will thank you. Your bank will thank you. Yourself will thank yourself. Okay, that's all I have for today. It's 9:20. I will be back at it tomorrow. Make sure you download the order flow pulse. If you want the heat map, you're going to have level 2. If you're only trading the NQ, don't be buying level 2 for the full market that the CME gives you. It's not needed. Only spend a little bit of money and get what you only need. If you only trade the ES and NQ, it'll be cheap. Don't buy the whole full package. Just only get what you need and what you trade. That's all I have. Talk to you later.